Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Friday, November 7th, and my name is Raleigh White, and I'm coming to you live from just another gorgeous day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a continued focus on the volume weighted average price, better known as the VWAP. And in today's session, he's basically going to put your stocks through the average weighted volume weighted the AVWAP ringer. He's going to do that. He's going to ask you to go ahead and give him some stocks that you're looking at, and he's going to put them through the anchored VWAP ringer. He's also going to answer all of your follow-up questions about the anchored VWAP. He's also going to talk about, the settings that he likes to use and when he applies them. He's also going to give us the three different ways that he likes to trade anchored VWAPs, specifically on pullbacks, channel breakouts, and A-line confirmations. And as a bonus, time permitting, he promises to share his earnings updated scorecard. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout his presentation so as to not interfere with what he's sharing. Secondly, folks, the chat is open to everyone, so please remember the ground rules. Always be kind and supportive with your posts. Keep to the topic. No political discussions allowed whatsoever. And also, folks, please, please, please keep your side conversations to a bare minimum so that the rest of us can focus on the education and the information that Roger's sharing. Because after all, he's taking time out of his day to go ahead and help give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. So for those of you that joined us this morning for Roger's pre-market briefing, you note that we started off by talking about what are the key catalysts that we need to be focused on today. And here's what we discussed on the have to pay attention to the chips and the technology sector. We saw that XYZ was down 14% coming into the open, and AMD and Marvell were also both down 1%. In the energy sector, we knew that CEG and ENB were both scheduled to go ahead and release their earnings before the market open. On utilities, Duke Energy also getting ready to release their earnings before the market opened. Financials, KKR also releasing earnings before the market opened. And then on the consumer front, we noted that Expedia was up a whopping 17% coming into the open, and TTWO was down 5%. We also note that on the Fed front, there are a couple of FOMC speakers scheduled to speak today. We had consumer sentiment data come out, and it was not good, folks. And normally, this is the time of the month when we expect to get the monthly jobs report. And for the second month in a row, that report has been delayed due to the government shutdown. Okay, as far as Roger's small cap watch list is concerned, we scoured through the markets and he only found a couple of tickers worth focusing on, MSGM and AZI. So let's go ahead and switch over to my other chart screen here, and let's see how these two small caps are doing. Now, you're seeing my charts right now. There are 8 panels, and over here on the left-hand side, this is where I've got the today's small caps. In the upper left-hand corner, we see MSGM. The pre-market high was $5.80. The market opened up and it drifted lower. Volume is tailing off. It does not look at all like we're going to hit and then aggressively move through that level. In the lower left-hand corner, we could see AZI, and its pre-market high was right here at 17 cents. The market opened and it's drifted lower. Once again, volume is falling off, and I don't expect that we're going to see anything here whatsoever. What else do I have on my chart that I'm showing you? Over here on the right-hand side, we have the SPY and the QQQ, and then down here we have the TLT, the bonds, and we have the Russell. Interesting thing about these charts right here is that you'll note in an instant that though bonds have been moving higher, the indexes are not following suit. You'll also note, and I'll talk about this in a little bit more, that the lines that I drew in the sand here, these were Rogers levels from this morning, and this represented key areas of support for these indexes, and you could see that we broke through those and have been losing momentum throughout the trading day. But more on that to come. So let's go back to my normal presentation here. And one thing I do want to mention to you before I move off of the small caps, Roger selects the small caps based on price action, but primarily on extreme volume. I mean, he is looking for volume that's maybe as much as 100 times more than the normal volume in the pre-market to go ahead and identify his opportunities. And the other thing is this, folks, when you see these small caps, only consider trading those during regular market hours. And if you don't have a fill by around 2 p.m. Eastern time, forget about it. It's not worth getting the fill and risking your money. And also, folks, if you do get into one of these small cap trades, never hold the positions overnight. It's just not going to pay out for you. It's much too risky from that perspective. Now, as far as the large caps are concerned, Roger pretty active here. He shared 11 shorts and 10 longs. And for those, once again, that are with us during the pre-market briefing at 8 o'clock in the morning Eastern time every day, you note that Roger brings up each one of these ticker symbols. He brings up the chart and he usually has a quick comment as to what he's looking. In some cases, it might be, hey, let's just wait for this stock to break below the VWAP. Or in another case, he might be saying, look, we're above the 200 average. I'd like to see it move into this level before considering a trade. The key is this. These are just not random tickers that Roger has selected. This is actually on his watch list. And if any of these tickers basically either, reach a level or create the kind of setup that Roger's looking for, more than likely that is going to represent a trade that's given in the trading pit or in other of Roger's premium services like A-lines, for example. So once again, this is his pre-market stock watch list, and he usually will do an update, time permitting, in the middle of the day as to what he's looking at in the afternoon. Now, as far as Rogers' closing pre-market comments are concerned, he noted that the markets were lower coming into the open. Largely, the biggest motivator there was the fact that the concerns over the shutdown are now starting to bleed over into the market. He noted that the sectors are a mixed bag. What does he mean by that? If you look at the top of the sector list, you'll note that there's a combination of defensive and speculative stocks there. And he also noted that the VIX was rising above 20 and was going to keep an eye on that to see if it broke through the 21 level or not. These are key areas of resistance here on the VIX. He did also he told us and he showed us that the bonds are down and they were in a recent range below the 50 EMA. Now, bonds have actually rallied today, but coming into the open, he noted, look, bonds are down in their range, below the 50-day moving average. He also saw that all major indices were sitting at major support levels. So the question was, are they going to bounce off of these levels? Are they going to rest there and consolidate, or are they going to move lower? Now, on an intraday basis, they basically have moved lower. Will be interesting to see how they end up the day. Finally, folks, he said, look, you need to expect that there are going to be choppy conditions, all right? Don't panic. Don't panic whatsoever and be patient. Let the market basically reveal to you what he's doing before you consider any opportunities. It's also a Friday, folks. And typically on Friday, what Roger sees is, decent amount of activity potentially in the morning, and things tend to quiet out into the afternoon. So, as far as today's, agenda is concerned, not only do we have a full house of people here in the room, and we're delighted to see you here, but the focus today will be on a continued discussion on the volume weighted average price, better known as the VWAP. And Roger basically is going to put your stocks through the anchored VWAP ringer. So when he's ready, he's going to say, hey guys, give me some symbols, and he'll bring them up and we'll just do a quick analysis on them. Secondly, he plans to answer all of your follow-up questions about the anchored VWAP because a lot of questions came in during yesterday's session and also in email overnight. He's also going to share the settings that he likes to use and, when he applies them. He's then going to talk about his favorite 3 different ways to trade the anchor VWAPs. Essentially, those are pullbacks, channel breakouts, and A-line confirmations. And then lastly, time permitting, if we can do this, he wants to give everyone an earnings updates scorecard. So once again, something that he's been intending to doing, and time permitting, he'll share that as well. So folks, if you've got any questions during Roger's presentations, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also remember, folks, that the chat is open to everyone. And remember the ground rules. Be kind and supportive in your posts. Number two, keep to the topic. Number three, no political discussions allowed whatsoever. Also, folks, please keep your side conversations to a bare minimum so the rest of us can focus on the education and information that Roger's going to be sharing. Because, guys, he's taking time out of his day to give us an edge in trading the markets and to help us all become more confident and consistent in our trading activities. And with that, let me go ahead and open up the room here and let's say hi to Matt, say hi to Roger. Hey, guys, first of all, in my opinion, this week is just blown by. I can't believe today is already Friday. And my wife told me, Thanksgiving's around the corner. Better start thawing that turkey. Things are happening way too fast, Roger.
Way too fast. Way too fast. I'm thinking exactly the same thing. Way too fast. It's just, days are just. I was talking to Kane last night. I was on the phone with him, and I was like, I don't know where the last year has gone. You've been with us already for a year. It seems like it's been a couple of
just like yesterday.
A couple of months. Anyway, so all right. So let me share my screen. First of all, I want to talk about the broad market right now because I know a lot of people are nervous about the market and so forth. And I actually believe consumer sentiment and also the government closure is because we're now in unforeseeable category. And that unforeseeable category is impacting the market. Okay, there's no way it's starting to as I said yesterday, it's starting to spill into the private sector. Now, let me just take all these lines away from here so you could see this very clearly. Let me just erase all here. Okay, so very rational reaction to these markets. I think so. So right now we're right at the 50-day moving average. Okay, we're right at the 50-day. Now, the 50-day moving average is a very, very important psychological indicator for the market because institutions will sell some stocks that what they will do is this: they will stop aggressively buying when the S&P gets below the 50-day moving average. And I don't mean completely not buying, but they'll reduce the amount of buying that they will do. They will reduce the amount of buying they will do. There's no question about that whatsoever. Okay, whatsoever. Number two, if you look at the QQQ, you will see it's exactly the same scenario, except just a little bit higher. The big question right now, and I mean really the big question right now, is are we going to just one of the biggest reasons why I'm not giving you guys a lot of trades right now is because I want to see if we're going to break this level or not. Because if we break this level, it changes the trajectory and the dynamic of the market. If we break this level, then I'm going to start giving you a lot of shorts. I've been doing a lot of scalping today. I haven't even been posting it in the pit because you guys wouldn't either. The options were too illiquid or this, that, but I'm waiting to see. I'm biding time and I'm waiting to see what happens here. Right? If you guys want to know what I did today, let me just tell you my trading history. And I didn't post any of these. So I went short LMT. I covered LMT. I went long CME. I covered CME with a profit. I went short MPWR. These were all shares. I exited MPWR with about a $5 profit. I went short Enphase, and I covered Enphase for about 40 cents. I went short MOD, and I exited MOD. This is what I've done so far this morning for myself. I haven't been giving you guys anything because I have to be extra careful with you guys. You guys trade options, and you guys take time to enter those options, and some of those options are a little spreadier right now with the market. So I got to be a little extra careful with you. I think what I'm going to do, you know what I think I'm going to do, Raleigh? I think maybe next week, if the market has a little volatility to it, what I'll
Uh-huh.
do is I'll open the session and we'll just do live trades the whole time, or at least look for live trades. I think that would be a great idea.
That would be great. I think you offered that up as a possibility last
Yeah,
week, and
yeah,
man, overwhelming thumbs up from people, Roger.
yeah. I think I'm going to do that because and then nobody can say we're missing. Then nobody can say we're missing the trades, right?
Yeah, I mean, even if that's said, it's just so off the mark. Yeah, I
They'll
mean,
say something. They'll
yeah.
find something to say, but it's all good. It's all good. So I think we're going to do that next week. Maybe just do an hour of some live pit trading, and then I could just do my thing, and you guys can get. But as of right now, the way we stand right now, market internals are not looking that great. Ironically, there's not that much in terms of the tick. The tick keeps going to 800, but not below it. But ADD actually, am I sharing my screen right now?
Yes, we are seeing your screen. Yep.
Okay. All right.
We're looking at the SPY right now.
Right, right. So you could see right here, the Vold is the Volt. You can always buy it again, Katie. Nobody's stopping you. You can always buy a debit spread for next week. It's a world of free will and self-determination, Katie. All right. The ADD is below 600, and we're now breaking today's low on the ADD, which means sentiment is only getting worse. It's not getting better. And VIX has been going straight up as the day. So we're not looking great on market internals. Okay. When you mentioned these tickers, the ones that I just mentioned, they were all under. This is all me, myself, and I underlying. I didn't even post them in the pit. Yeah, because I know you guys do options, and I always am very mindful to give you guys stuff that has really good liquidity. And I was also in some of these for 10, 15, 20 minutes, and I know you guys are I try to do them when they're only great. Okay, I'll tell you what it is. The stocks I traded today all are great day trades. I try to only give you trades in the pit that are good swing trades and day trades. So I have to find a double whammy. It's a double whammy, just so you understand. Okay.
Hey, Roger, I don't know if you picked it up, but several people here in the room did quite well on the Airbnb calendar spread.
Yes, good. Excellent. I'm so glad to hear that. Oh, speaking of which, thank you for reminding me of that. Thank you for reminding me of that. Actually, here's a perfect example of the worst thing that happened. Not the worst thing, but this is now check this scenario out. Okay. Look at this scenario. So thanks for reminding me. So yesterday, I gave you guys a bonus time spread in the pit on SMR. I should have given the other one, right, Raleigh? I should have given the other. Anyways, I've been giving so many trades out that I can't even keep track anymore. Okay. It's getting to that point. Okay. So I gave you this SMR trade. Okay. So I want to show you how cool this is. And you're like, well, why is it cool, Roger? We're not making money on this trade. Well, let me show you how cool this is. So this is when things go wrong on a debit spread. I mean, on a time spread. So we sold the 35 yesterday. Okay. The 35 yesterday. And then we bought the 35 that expires next Friday.
Okay,
Okay.
a week from today. Yep.
Yeah. Now follow along. We paid, what do we pay? 82 cents, something like that. Help me out, guys. 82, 83, something like that.
About
84,
80,
82.
80 to 80 to 82 is what people reported.
Something like that, right?
Yeah.
73. I thought it was 83. Oh, Jill got a good fill. All right, 73. I thought it 8. Yeah, I thought it was you did really well, Jill. Yeah, I think most folks did 8 in the 80s. And if you got above
Oh, yeah.
82 or
She
80,
just corrected herself. 83, not
yeah, 83.
73. Yeah.
Perfect. Yeah, 83 is fine. If you did over 83, then you should slap yourself silly for not following instructions because I told you not to chase it. But not relevant. That's fine. We could all live with that. Not a big deal. It's an 80. It's not 5 cents. It's not a 5 cent option. But let me show you something cool. So this option, this 35 that we sold, I don't remember what we sold it for yesterday. You know what it's going to be, what it's going to cost after today's expiration? A big fat zero. Unless a miracle happens, it's going to be worth a zero. But here's the cool part. This is when things go wrong. When things go right, we don't talk about them. We just take profit. But this is when things go wrong. They should, that show when things go wrong. I think about like animals attacking or something like that. So this is when time spreads go wrong. So check out this time spread. Right now, this time spread is worth 20 cents. This morning, it was actually worth 39 cents. Still, you would have taken the 50% loss. But here's the good part. Let's just say that next week, Monday, Tuesday, Wednesday, Thursday, even Friday morning. No, Friday afternoon too, because it's out of the money. Let's say that this stock rallies $2, literally $2. Do you know how much this option is going to cost? $1, $1.50, $2. You'll have unlimited profit potential on the option that we bought, and you paid 82 or 84 cents, 80 something cents on it. So the worst case happens is, okay, all right, it went totally against us. Well, you got an option free and clear now with 5 days to go. And you could have liquidated it this morning at 40 cents if you really wanted to. Okay? Just FYI. So that's not a bad scenario because you know what? There's about a 50 to 70% chance that this will reverse its loss. And if this goes from 27 to 30, this thing right here is going to go to about $1.52. This thing's going to go to $1.52. Anyway, I'm just saying.
Very tasty, and this is like when things go bad.
Yeah, this is when things go as bad as they can go, because I mean, look, we went far out. The best thing would be for it to just open right here. So all is not lost. You've got 5 days, and you got today all the way till next Friday for this thing to rally. That's not bad. And you paid 82 cents or 83 cents for that. No, there's not much risk. And Cyrus, you could have got it. You could have gotten out this morning for about a 50% loss. And you could have offset the one that expires today. So you probably could have gotten for about 40 cents, 50%. But folks, that's the first time that's happened to us in about 3 weeks. The last one we took a loss on was Dow. That's like 2 weeks ago, 3 weeks ago. We've been doing time spreads all week and last week, and we've been making money on it all the time. 25, 30, 35, 40%. You don't have to do anything, Rock. It'll just expire worthless because it's going to be under 35 today unless a miracle happens. And then you've got and by the way, I want to show you guys something. Look at the volatility. Look at the volatility, daily volatility on this stock. Check this out, Raleigh. It's $4.42. And you've got 5 days. Capiche?
Yep.
That's pretty good.
Yeah.
That's pretty damn good.
Stats are in our favor, that's for sure.
Yeah, I mean, this thing, I wouldn't mind doing a straddle strangle on this thing for about half of that, which would be $2. So that's pretty good. Yeah, I mean, again, but it's better than buying a $10 option on Nvidia, having earnings, and then the option be worth $1, and you're stuck and you're done.
Yeah, right.
That's not how you play earnings. This is how you play earnings. You are taking advantage of earnings, not somebody taking advantage of your FOMO during earnings. And I wanted to spend the time with you. Do we take off the working order target? Yeah, of course, Phil. That's a done. That's goodbye. Goodbye. Good night on that one. Okay. Now I wanted to give you guys an earnings update to show you how we're doing. I'm pretty confident that this move we're seeing in the market, it is really, really driven by this. It started this government shutdown. I really do, and consumer sentiment as a result of that. Dragon Dom, nobody took. I'm not suggesting you take a loss. I'm just suggesting that I'm saying that if you wanted to, you could have taken one for about 39, 40 cents. That's when I came to the office 10 minutes late and I saw it was trading at 39 cents. Yeah, you don't need to take any loss. There's nothing for you to do. The one that expires today is going to expire today. There's nothing for you to do. And you have a 35 call that expires next week. That's completely paid for. It's not bad. You can get rid of it now for 20 if you want to. If it rallies $1, it'll be worth 40. And if it rallies $3, it'll be worth $1. This thing has an ATR of $4.42. Yeah, that's pretty good. If it had an ATR of 50 cents, I would be very concerned. But it has an ATR of
$4 plus,
yeah,
right?
per day. That's an ATR. That's an average of the last 10 days, $4. That's a pretty good ATR. All I need is one ATR move on it, and I've got 5 days. See, those are the kind of odds. Those are the kind of odds that you folks want to take. Those are the kind of odds that you guys want to be in, where it's a no-brainer. Of course, things will go wrong, but you want to be in trades that are just obvious, that are just so obvious. That's kind of like what I try to look for. Okay, this is a day old. Um, uh, can I enlarge this document? Hold on. Yeah, I can actually. I can enlarge this document. There you go. Does that help?
Yes, that's great, Raj.
Sorry about that. I got to be a little more mindful. Look, I'm starting to have the same problems. Okay, I'll be the first to admit it. The eyesight is not what it used to be. I had a LASIK surgery about 19 years ago. 19 years ago, and I think I may be due for another one. Yeah. If the government, if the government opened up again, I think it would be very bullish for the market. I don't think it would have been very bullish for the market a week and a half, 2, 3 weeks ago. I think it would be very bullish for the market right now because we're in an uncharted territory. And whenever we're in an uncharted territory, people lose their minds. They do. People are like, well, we've never, like, oh, we've been here before, 34 days for 30, we've been here before. But what? What? So it's a, me too, Fred, best thing I've ever done. Older, so lens implants. See, I don't know anything about. I got to go to a doctor. I gotta go to the doctor. I
And
really
Roger,
do.
I need to tell you to stop looking at the chat.
Oh yeah, 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 yeah. I need, but I
Come
do
on,
need
we
to
got a
go to.
lot of material to cover here.
Yeah, we do. We got a lot of material. So we've had almost 400 folks, 400 stocks reporting. Total earnings are up 14.6%, which is about. I think Alexander at Bar Chart is expecting 7.2. We're getting 14.6. These numbers are really good.
Wow.
Really good, like really good. And you know me, I'm not going to blow smoke. I'm not like I have no. I'm going to go short, long, sideways. It doesn't matter. Proportion of these indexes beating both EPS and revenue is 67%. That's not bad. That's 2/3. For the tech sector, we now have results for 2/3. Total earnings for the tech sector are up 24%. That's way better than I ever expected in my wildest dreams. 92% beating EPS and 84 beating revenue. The numbers are good. I mean, we don't trade numbers, but the numbers are good.
Are good.
They're
Yeah.
really, really, really good. Okay. Now, with respect to growth, third earnings are expected to be. Remember, Zacks, they like to put their stuff into it. But
Yep.
anyway, Magnificent Seven, third quarter earnings are on track to be 26%. 26% for the
Yeah.
Max 7. This is really, really high. For the third quarter, revenue earnings expectation 13.8%, 8.1, and they've consistently been beating the numbers. So there's absolutely nothing. There's absolutely nothing, and I mean nothing, nothing, nothing wrong at all with how everything is. I mean, the fundamentals are looking absolutely fine. The problem I have is three AI. I can't believe I'm calling it AI. Three chip companies um, came out with numbers that were better than expected, and they all went down. That's what bothers me. Not those two nincompoops that said that we're overvalued. Warren Buffett's been saying it for I don't remember how long now, but he's been saying it for a while. So
He
that's not going.
has. You're
That's
exactly right, Raj. Yep.
yeah, that's not going. That's not the reason this is happening because some Morgan Stanley guy that nobody knows, Jamie Dimon could say it and nothing will happen. You think two Morgan Stanley guys will? Come on. All right. Um, now, so I showed you. I kind of showed you where the market is. I gave you the earnings update. Now it's time for me to go through your favorite stocks, and I'll add the most recent VWAP to see how it lines up. Raleigh, you're gonna have to do the call outs
I'll
here.
feed those to you. So, guys, now would be a great time. Post your favorite stock in the chat, and then I'll share that with Roger. So, the first one on here is PLTR.
PLT, Palantir. Oh, we haven't
Yep.
seen that one in a while. Okay, Palantir. All right, all right. Delete this. Yeah, we don't need that here. Okay, Palantir is, let me delete these lines too. We don't need them right now. Palantir is pinched between the 100, between the 50 and the 100 day. It's right at the bottom of my deviation levels and at the 100 day, which is telling me that we're probably going to bounce up, which we're doing right now, actually, quite well. I wouldn't touch it with your money unless it was above the 8-day EMA, but what I may do is consider writing some put options on it, a bull put spread on it, because it's got a couple of areas of support here. Overall, it looks like it's in a pretty stretched out pullback, and it looks like it wants to come back up. But I wouldn't be doing anything till I get at least something, a confirmation building here and some kind of a technical pattern saying so. But what we do have now is we have the opposite of that. And whenever we see the opposite of that, that's telling us the rubber band in the short term is overstretched.
Is overstretched. The next one, Roger, Lumen.
Oh, and by the way, here I'm putting the VWAP. Oops, excuse me. I'm putting the VWAP right here. So the VWAP is telling us that all of these people here are going to start making their money back when we're above this area here, and we're nowhere near there. Sorry.
So what Roger just did is he went to the swing high and he anchored the VWAP there, and that's a critical indicator for him. The next symbol was Lumen.
We actually have Lumen in one of our programs. I gave this as a bonus trade in the pit, and then I liked it so much yesterday, I told Matt to put it in one of our swing trading programs. So I'm not going to talk about it because it's in one of our programs.
Okay,
So
I got you. We've got plenty of other tickers.
Yeah.
GE.
But I have a perfectly good email address, and if you guys are not lazy enough to send me an email, I'll gladly tell you what I think about Lumen. What was the next one?
GE.
All right. GE brings good things to life, right, Raleigh?
Yeah,
Do you remember that?
I do.
How long ago was that?
Man, I tell you, I don't know, 30 years. I think
That's
I
what I
can
like
remember
about you.
watching like Walt Disney on Sunday
Yep.
nights. That came
Yep.
up,
That's right. That's right. That's what I like about you. You can relate to me. Oh, same thing. 50 days, excellent support for this stock right now. I think it's going to hold the 50 day. We're also near this band here. So unless we see another fundamental shift in this market, like next week they come out and say we're at a stalemate, otherwise I think we're going to start coming back up here, but I wouldn't touch it till we're above the 8-day EMA. Now, let's put the VWAP here. Right there. 308.25.
25.
Yep.
Perfect.
308.25. Yep.
Perfect. The next ticker symbol was IDR.
IDR. The stock is going down pretty hard. It's breaking down. I mean, there's really nothing exciting about the stock or nothing that I like about the stock. It's just consolidating near the 100-day moving average. It's something you would not touch or have any reason to touch. All right, next one.
Okay, the next one, NVIDIA. Small little
NVIDIA.
company.
Yeah,
Small little company.
NVIDIA's bouncing right at the 50-day. As you could see, it's right here. Let me delete this crap. It's right at the, see how right here what happens? Right here what happens? Look at what's happening right here.
Mm-hmm.
See that? You see that? And it's happening right at the 50, right above. So I think we're gonna consolidate or start coming back up here. But I wouldn't touch this till, I don't know why it likes to go one back. All the way up here. All the way up here. I know I'm very boring, right? But
No,
that
it's
it works
great.
really well.
It's just, it's rinse and repeat. Next one, Walmart, WMT.
Gotcha. We're pinched right between. We're doing absolutely nothing. It's a no-go on anything. It's just a not doing anything. Not doing anything.
And what's the anchored VWAP on that one?
It's right here.
There you
Right
go.
here at 104.24 as of right now.
Okay. Next one, Tesla, TSLA.
Tesla touched the 50-day overextended. Uh, Again, looks just like Nvidia, like they just want to kind of rest here, build a base, or start coming back up. A lot of these mega caps, like today, notice the pattern. They're all coming down to the 50-day and they're holding there. Here, let me see something here. Not Microsoft. Microsoft broke, but again, right at the edge of that level. Sorry, I didn't mean to. What was it? What were we looking at? Tesla, was it?
Yeah, it was Tesla.
Tesla. Yeah, let's go back. And then here. That level would be right here. Right there. Right there. 443. I would err on the side of caution and wait till we're at about 448, 450.
Great, Roger. All right, you ready for the next one?
Yes.
Apple, AAPL.
I like Apple. I really like Apple. I'm actually looking at Apple right now. I like Apple quite a bit. I mean, it's consolidating. It's showing really remarkable relative strength on a daily basis compared to all other stocks. So you got to give it some brownie points for that. Uh, it's you don't need to go very far for an anchor. You got it right here. The less you have to go, the better. And you could see we're hitting the upper part. So as long as we start trading right here with gusto, we're good to go. But I like Apple. As a matter of fact, if the market decides to reverse and start coming back up, this thing should come up. It's got. I mean, this is really good relative. I mean, look at the market. Look at the market.
Yeah.
Which happens to look just like RSP did a week ago,
Yep.
and I told you that the market's going to look like that. And
It
now the
did.
market,
You did.
I
Yep.
did, and now it looks just like that. It's completely in balance with the broad market. So look at this. This is SPY, right?
Mm-hmm.
And look at Apple.
Yeah.
That's relative strength. So my theory is if the SPY starts coming back up, this will start bolting because this is because it's got a lot of it takes a lot of work for it to be here and not fall down. All right.
All
Hopefully
right.
this is helpful to all of you.
I think people are really enjoying this, Roger, because you're just reinforcing your process very, very quickly. This is like, lightning round.
There you go.
So the next one was, I think it's Peloton, PTON.
Oh, let's do that. Peloton. Ooh, my. Peloton. Sorry, I had the wrong ticker symbol. This one, Peloton. Peloton looks like it's setting up to be a really good short. It's already trading below the 200-day moving average. It's got high volume bars. It's confirming below the 200-day moving average. I wouldn't do anything to it because it's choppy, but it looks like it wants to go down. I certainly wouldn't be buying it, and I wouldn't be putting any VWAPs on it right now because it's below the 200.
Okay. Good
All
point.
right.
Next one, Crowd, CRWD.
I haven't looked at this one in a while. This is good for me because I get to look at some stocks that I haven't looked at in a while. It's been a while. It's still at the 15-day. It's actually holding. It's not as good as Apple, but not that bad at all. I wouldn't buy it till here. Let me make it easy for you. Look. See that? About 539, 540. That's your sweet spot for an entry right there. So it would have to break the 8-day EMA, and then it would have to trade above this level, which actually makes perfect sense. Which, by the way, at that point, it would be a perfect A line. See how it all you see how it all comes together and how it all
Starts to come
builds
together.
and it's like Lego pieces. Everything I do is like Lego pieces. Anyways, let's yeah.
Keep on going. Okay, Rocket Lab, RKLB.
Got it. I actually know the ticker symbols. I don't know my second street to my house, but I know every ticker symbol.
It's just the way you're wired, Roger.
It's just the way I'm wired. Yeah. Okay. It's below the 100-day. It's a sell. Right? I mean, this is a very weak stock. It's actually weaker than the market. This would be on my selling block right now. This is actually a short entry right here. And with the target of the 200. The only thing you've got here is you got a lot of high volume bars here. So my suggestion would be to wait till it gets below this whole stuff because there's a lot of support here. Remember, look to the left. If you look to the left, you see that? So my suggestion would be if you wait for this to be down here, you're not going to be late for anything. You'll just be below all of this because this price area can hold this. Just my 5 cents. And again, because we're below the 100, I don't see the point of draw. I mean, I could draw it for you, but it doesn't make any sense. It's got to go all the way up here.
It's got to go all
It's
the
got
way.
it's just too far away, you know.
Hey, so here's a recent one that popped up, Roger, that we're looking at, IBM.
Oh, oh, good. It looks great, actually. It touched the. So this is another stock. This is in the same ballpark as Apple. It's respecting the 15-day. I mean, look, we went from here to here, right? That's all we did. On the SPY, we went like that.
Yeah,
So
exactly.
I mean, you don't need to be a technical, you don't need to be Clyde or a technical market wizard to see that IBM is bouncing off the 15-day and it's supporting the 8-day and it's building a little round. So if this comes off and comes up here, like up here today above the close, you've got yourself an A-line confirmation.
Hmm. And what would be the anchored VWAP on that one? Pretty
Yeah,
much
yeah.
the same. Yeah.
You actually just took the words out of my mouth. I was just about to go there because it's actually really important, and you could see we already passed it yesterday. I
Yeah.
think I showed this to you yesterday as an example
I
of an
think
A
I
line.
think so too. I'm
Yeah. I
recognizing
mean, we
that
talk
pattern.
about so many stocks, but and it's still there. I mean, it's just all it needs to do is just come up here. So I would not. I would be. This would okay. So this stock right now would be edged on my forehead and saying, keep this on your watch list. Apple, keep on your all of these stocks that are like still hovering around the 8-day that are looking like they want to come up. Those are the stocks I would be either holding, waiting to buy, or doing this come to Papa season 4.
Right.
The IBM, the Apple. There was a few that I set here, but that's definitely a keeper right there. It's easy to find good stocks when markets are crapping out.
Yeah, because they stand out.
Yeah, it's effortless. Like I could find you right now. Ask me for a good short stock. It's a problem. Long stocks. I could find you the best long stocks right now. Anyways, let's continue.
All right. And for the folks here in the chat panel, I'm glad we're having this walk down memory lane. We've got a number of people, Roger, that are septuagenarians, and they're sharing that information, but it's taking away from what Roger's talking about here. So let's keep focused on what Roger's discussing for the rest of us here. Another ticker, Roger, Netflix,
Oh, let's do it.
NFLX.
Netflix. Hey Matt, can you hook me up?
Yeah.
Thanks. All right, Netflix. Well, let me tell you something about Netflix. Netflix has become a short for a while now. We broke this level down, which we couldn't break hard before the stock market started going down. And now we tried to break the 200 on the way up, and look what happened on a high volume bar, and we couldn't. So we break down, we confirm down right here. See, you guys got to understand something. When I'm looking at a chart like this, it tells me a story. Thank you, sir. Every chart tells me a complete story. And what this is telling us, we have a gap and go. Then we try to come up for air. Buyers start coming in. They get wobbled right here, right here. So you have a breakdown, you have a continuation, you have a pullback to the moving averages to the area of the 200, can't hold it, and it's now coming back down. So this is like a boom, boom, boom. Here, let me draw it for you.
I love the way you said that, Roger, because it is a story.
Every one of these, you see, for you guys, it's just a chart. For me, it's a story. Look. See, it's like a right here. I put it here so you could actually see it, but that's what's happened here.
Mm-hmm.
You have like a little thing here, and now you have a breakdown again. So this is telling me that it's a short for 3 reasons. You have a breakdown, you have continuation, that's a gap and go to the downside. Then when it tries to rally on a pullback, it can't get above the 200-day moving average area for more than a day, and then it comes back below the 200-day moving average, and it did most of these shenanigans while the stock market was near a 52-week high before we broke down. That's a weak stock. That's a story right there.
Right.
Now,
and that's great. Just love the way your mind thinks through that.
And again, I would put the VWAP here. I mean, because this is an A line to the downside, and you've already passed through it right here.
Mm-hmm.
But again, there's a story, and you need to teach yourself to tell that story. If you can't, go ahead. Let's put another one on. You need to be able to tell that story with every stock. Go ahead.
All right. So let's tell another story here. Let's take a look at Hood. What kind of story is it going to tell us?
All right. Well, it's been very, very choppy. It's obviously very, very weak. But notice something here. Notice how this high right here is higher than this high right here. What do I always tell you? We don't like pullbacks from we only like pullbacks from swing highs. See, if this high was higher than this high, I would have a totally different analysis for this stock. And if you're thinking, wait a minute, this sounds like deja vu, it is because I've talked about this a million times.
Hmm.
See, this area is higher than this area. If this area is higher than this area, it erases this. But this area couldn't go as high as this, and then it pulls back below the 50-day. That's a sell. If this area was higher than this area and we pulled back, I would say I'd want to wait for a pullback and I'd want to buy it. So we made a high, we made a lower high, we couldn't match this level. Then we broke down after we made a lower high, then we broke down below the 50-day moving average and it's got no upside. That's a sell. That's a nasty. Look at this. It's subtle, but if this was higher than this, it would be a completely different picture in my book.
Different story. Yeah. Interesting,
Mhm.
Roger.
And again, as
Uh,
I told you guys yesterday, I think that was one of the first things I've ever taught Matt. Pullbacks are much better from swing highs than they are from years and years ago. One of the first things I ever taught him. Pullbacks from swing highs, not from lower highs.
Not
Never,
from
ever,
lower
ever
highs.
do that. That's one of the first and the most painful mistakes I've learned years and years and years ago. All right, let's continue.
AVGO, AVGO.
AVGO. And by the way, notice how the VWAP is helping us here. Okay, now here's a perfect example. This is a higher high than this.
Yep.
See, we're making higher highs. Therefore, I would not be shorting this. I'm looking for a pullback back up. If this was a lower high than this, I would be looking for a short because it's already making lower highs. It's
Yeah.
already weakening. See? Now, VWAP here comes in very handy. See how the VWAP is giving us our fail-safe level?
Hmm.
All you got to do is put it to the swing high. Now, what we do in Quick Strike, we go back 100 days to the high. We don't put it back 100 days. We look back 100 days for the highest high. That's what we're
Okay.
looking at. Yeah. All right, let's continue.
All right. So let's see here. DXCM.
I was actually looking at that. That's actually on my watch list. This is one of the stocks that I was looking to go short today. I almost did actually, but this was on my short list. All of these are high volume bars, which means this price action is not random. Okay. Now, again, story time, right? So we have a gap. What happens after we have a gap? We have a gap. How much upside do we get after that gap? Hardly any.
Hardly any. Yeah.
And then we start reverting back down. We're making lower highs, aren't we? Lower highs. Yes, we are. We're making lower highs. And when we tried to rally here, we could barely, I mean, we just barely got into the gap and we started coming back down. And again, the fact that these are all white means there's a lot of volume in all of this. And usually when you have a lot of volume, that means the price action is not random. And now on a down day, with high volume, we're actually right here. That's today. Volume is increasing as we're going down. This was one of the 4 or 5 stocks that was on my scalp list today.
On your scalp list today.
Yeah, this
Excellent.
was one of the. This was definitely because that's why I remember it because I had it on my scalp list. Yeah.
So we have
all right.
time for about maybe 5 more here. How about cost? COST.
Just want to make sure that you guys are gaining some value out of this. That's what I want to make sure that this is beneficial. Is this I don't have the chat open right now, Raleigh. So you're gonna have to tell me if folks are finding this interesting, important, or educational. So the first thing I do,
huge value, Roger.
All right. So the first thing I see when I look at cost is what? It's choppier than hell. So the first thing I would say is you really don't want to touch a stock this choppy. You want to touch the stock when it's trading like this, not when it's doing this. So the first thing I would say is I wouldn't touch it. But if I was to touch it, it would only be to the short side because we've been trading below the 200-day moving average for since mid-July. Now, I'm going to tell you guys something, and I don't mean to worry you, but Costco is a pretty good barometer of the economy.
Yeah, it is.
And nobody's going to disagree with me on that one. And you don't have to be an economist to know that. Every grandma will be like, yes, this is a much better deter. Everybody knows that Costco's the best, right? Come on, you guys know. And it's not doing so well. And look, when it tried to rally above the 200-day, like for a few weeks, and then again started breaking down with lower highs, lower highs. Very choppy stock and very bearish stock. So
Hmm.
I would only trade it to the short side without even thinking about it, but I would stay away from it because it's really choppy. All right.
All right. So moving along here, AMD.
Nice, nice, nice. Okay. AMD just made a swing high. So we got to be really cautious about shorting stocks from a swing high. It's not making lower highs. But at the same time, it's moving along with the market, and it's one of the stocks that did not uh, rally, even though earnings were not that bad. With that said, it's overextended right now, and it's got a lot of stuff here. It's got a lot of high volume bars right here. These high volume bars offer a lot of support.
Hmm.
So I would be very, very cautious about selling this stock. I would wait for the stock to bounce and see how far up it can go. And if it doesn't bounce too far, I would wait for another breakdown and start selling when we're below this area right here. But the truth of the matter is, we're not really even at the 50-day moving average. So I would say that I would look at the stock. I would say if we bounce, this is going to be one of the first stocks to bounce. That's what I would say.
Okay.
Again,
Uh,
and the fact that we made a higher high here is very relevant. And if you're looking to go long this stock, it's right. Yeah, it's actually a perfect spot right there. I
right
gotta say,
there. Yeah.
that's about as perfect of a look at that perfect spot because it's when it goes up here, it would be breaking these high levels right here. It's like you could draw here. Let me draw a trend line for you guys so you could see. I love doing this. I could do this. I literally could do this all day. See this trend line? So
Hmm.
technically, if we're trading on this side of this trend line, you've got support, which is exactly what the anchored VWAP is telling you. Which is, I mean, I couldn't have drawn this better with the trend line. Okay, next one.
Fantastic, Roger. Google.
Google. That's another. I don't know. Did we not go over this? Okay, so this is another stock that's in the IBM and Apple territory. Okay, that's what I was forgetting. So I have three stocks that I'm really like
Kind of
salivating.
standouts. Yep.
Yeah. I'm salivating over them right now. And this is, I thought for some reason we went through this, but no, we just went through IBM and Apple. But this is the third one. And I love this stock for many, many reasons. One, if you put the VWAP right here, you could see we're almost there. We're literally, like yesterday, this was an A line. Yeah. This is just like IBM, folks. Look, same thing. Yesterday we had a perfect A line. Today we're just coming off right here. We're still touching the 8-day EMA. The 8-day EMA is acting as support right here, pretty much. So this is all we've been able to come down since the market's like doing this, and we're here. This is beautiful. I can eat this alive right now. This is very nice. That's the same thing. By the way, Apple, not as good, but 90%, 95% as
Kind of
good.
got the same profile. Yeah.
Yeah. IBM and Google are all in the same boat. And by the way, what three stocks have I been trading in the pit all week? What?
What?
Yes, Google, IBM, and Apple. Yes. It must be a coincidence. I'm telling you, it's a coincidence, Raleigh. It's probably a conspiracy. Folks, I'm extremely transparent and I don't bullshit you. I do what I say and I say what I do. All right.
All right. UNH.
UNH. I haven't looked at this in a week or
One of your
two.
healthcare stocks, Raj.
UNH has been crapping the bed. I mean,
Oh, no
I haven't
kidding. Look
looked
at
at
it.
this since we exited it about a week or two ago. Time just, as you know, we've been talking about it runs away from. And also, remember, I worked from home one of the days in this week on Wednesday when the internet. So to me, it looked like I had a 4-day week. So I don't really count
Home
my
days is
my short.
work
Yeah.
week.
Mhm. By the way, I want to So anyway, this stock is at the 100-day moving average. I can't say anything good about it right now, except it's below the 200-day moving average. It's below. I don't like this stock. I don't like this stock. I don't like it right now. I don't like this stock. What I do like is this stock, DXCM for a
The
short.
XCM. Absolutely. That's
Yeah,
on your watch list.
this stock looks like a really good short right now for a day trade. Yeah,
All
I'm,
right.
I'm
How about
salivating. Yes.
let's go with a single letter, D.
D. Oh my. Oh, look at this. A utility company. Well, again, let's talk stories here. What happened when this stock went and dropped down to the 200-day, literally when it dropped to the 200-day moving average? You guys know what a capitulation is? That's a capitulation. So next week, when I say we need a capitulation in the SPY, if we start breaking down, don't ask me what a capitulation is. I'll show you right now what a capitulation is. And no, it's not a song that goes capitulation, No, it's not that. It's this. It's a V. It's a V. That's a capitulation, and that's a 200-day moving average right here. And now we're above the 50, and we're above the 8. It looks like wants to come right back. Oops, it looks like it wants to come right back here into its base. Looks like it wants to come right back here. So you got a little more upside. And it is a defensive stock, but this is a nice capitulation. Very nice capitulation. All right. I think I've shown you guys enough goodies. What do you think, Raleigh?
Yeah, I tell you, I think it's been incredible, Roger. I'm just keeping an eye on the clock. It's 12:50 at this point in time. I have a handful left if we want to go through them quickly, or
Yeah, just give me 1 second. I just want to get a
we'll,
document here.
we'll do some rapid fires here. And guys, I wrote these down as quickly as I got them. I mean, I literally probably you gave me over 100 of them. But this is great as advertised. And something else, folks, for you, for those of you that are just, once again, just really getting an awful lot of value out of this, and I know you are. I'm just want to post this here for you is that the VIP session is available on demand. Basically, if you want to rewind and watch any of this, you go to Roger's YouTube channel at the VIP Trade Room, which we're in right now, and you can rewatch this to your heart's content.
Matt, are you short right now?
Yep.
That's a good answer. Okay, next couple. Let's do a few more.
Okay, so let's do them quickly here. TSM.
Very nice looking stock, right at the 50-day moving average, kind of mimicking the market. I like how we kept making a swing high here, but we started selling off a little bit here. I don't know if I would consider this a lower high. I would just keep an eye on this stock and wait to see for it to come back up. It's still stronger than the market. It hasn't broke the 50-day moving average. If it starts breaking here and really starts getting a little volumey, notice as it's coming down, it doesn't have a lot of volume behind it.
Oh, good point.
So yeah, I wouldn't throw this one out with I wouldn't throw this one out with the bathwater just yet. I'm not
All
hating
right.
it. It's okay.
It's okay.
It's okay.
All right. Oracle. ORCL.
Yeah. Now, this is if what was the stock we were just looking at? Was it
TSM.
If TSM looked like Oracle, it would be ready. So look, lower highs broke down to 100-day with a 200-day target. That's a short right there.
Mm-hmm.
See, lower highs. The highs are getting lower and lower, and each of these are high volume bars. Breaks the 50, breaks the 100, keeps going, and now breaking down. You've got nothing in its way.
Mm-hmm. Yeah, interesting because you look at that huge gap up in Oracle, Roger. That's when they announced that they were doing some AI merger with ChatGPT or whatnot, and it just took off like a rocket. It established its own range, and now it looks like it's falling back to where it was.
Yeah, yeah.
Okay, so then we have Affirm, AFRM.
It's doing nothing. I mean, it's pinched between the 100 and the 200. It's not doing anything. I mean, it's holding on really well, but it's already kind of crapped the bed a while back. It's already at the 200-day moving average. So I mean, there's nothing to say here. It's in a hurry up and wait mode right now.
Okay.
Yeah.
That's and then we have two more on the list. Amazon.
That's always good to look at.
Yeah.
Um, Coming down from a swing high. By the way, do you guys remember in the morning show when Amazon was up here and up here? And I said, if you guys think Amazon is going to stay up here, I'm going to sell you some ice.
Ice.
I, I,
That's
I
right.
did
Ice in
say that.
Alaska.
I did say that.
Yeah.
And if you don't believe me, go listen to the morning show. I said we're not going to stay here. Don't fairies, crickets, rainbows. No, no. Amazon's going to come, and it's coming back down to this area. I like Amazon. I like it. I just don't like it here. I do like Amazon here. It's a little too early. I'd like to see it come back to this area, come back to Earth, consolidate, and then we'll see what happens. This is like too much stuff going on, too much unforeseeability, too much. It's still in motion. I want to see where what's that expression? Where the
Equilibrium.
Yeah, basically like where the dust settles, where the dust settles. That's the word. When the dust settles. I want to see what happens to it when it like stops moving because it's
Okay.
still in motion right now. Yeah.
All right, Roger. And the last one on the list, General Motors, GM.
GM. Oh, I like GM. I was telling folks today how much I like GM. I'm actually thinking of buying GM. Um, I like GM quite a bit. It's a perfect A line right now. Let's draw our. Look at that.
Yeah.
Do I need to say more?
Nope.
It's a beauty.
That was a good one to end on.
Very nice to end on. I would put this I would put this in the same boat as IBM, Apple, and Google, maybe even better.
Hmm.
Because today is actually the first day it's making an A line in a shitty market like this instead of yesterday when the market was bullish. So I really like this stock a lot. I don't think I would day trade this stock because it's General Motors and it's got an ATR of $1.38 a day, but it's got tight options and it's something I may consider writing a bull put spread, Matt, on. Matt,
Yeah.
you heard me?
No, I didn't.
Bull put spread. GM.
Uh-huh.
All right, something to think about. Earnings in 20 days. No. Earnings in a while. We got a while to go. This is a beautiful A line, folks. This is about as good as it gets. And again, we're not overextended. What happens? We're coming off a swing high. We're at the 8-day EMA. And when we put the anchored VWAP, what do we get?
Look at that. Beautiful.
Folks, if you think that I've got it down to a science at this point, not in terms of what I know will happen in the future. That's not what I'm talking about. I've got it down to a science in terms of how I look at the market and how I analyze the market. There's very little subjectivity at this point. It's very, very straightforward. Another thing I could say about GM that's really attractive is look at the quality of this move. Let me teach you something. This will be our parting shot, and I'm going to say this is a really good session. I'm going to talk a lot about the VWAP right now, but let me show you something. Look at this chart. Look at this chart. Look at this chart. Look at this chart. How predictable is this chart versus this chart?
Yeah.
I'll leave it. I'm going to leave it at that. Now, I have a class for you. I hope you guys pay attention. I hope that you guys listen to everything I say. Please don't go anywhere. Today's the last day for this. And if you want to hear all the details I just showed you a really cool way that I use VWAPs. We also have a program that uses VWAPs, and I'm going to explain to you why you should be using VWAPs, okay? So let's get into this, okay? Let me just share my screen with you. Raleigh, you'll be very proud to know that I did not open up my chat the entire time when you told me to close it. I still have not opened it up yet.
Well, once again, let me give you a synopsis here. First of all, we had easily 100 tickers were put in the list, number one. Number two, when you asked the question, are you getting value out of this? I mean, the chat exploded. People love this, Roger. And I think the comment that really captures everything is a session like this just reinforces things that you've been sharing with people over time. and you're putting it into practice. And the fact that it's kind of like a rapid fire thing, it's basically you're telling a story. Let's look at the next story. Let's look at the next story. And that, I think, for people that many of us are visual learners, okay, it really is helpful to see all that, because once again, you're talking about your moving averages, you're talking about the VWAP, you're talking about various levels that are important. You're sharing informations about, when should you look at a pullback off of a recent high, all those things. People are just, it's like gold for people that are really trying to understand, Roger, to become more disciplined and patient in how they look at the market. So once again, Roger, kudos. And when you said, hey, let's take a session maybe next week or whatnot and just do some live trading, the chat box exploded on that as well. So
Excellent.
and it's not about people wanting just to shadow you, Roger. People are really interested in learning, and the application is really what's reinforcing all this.
Yeah, so I think we'll do that, and we'll do it right off of the Pro Trader dashboard. By the way, just wanted I didn't mean to interrupt Raleigh, but I just wanted to show you that right now I'm looking at the Pro Trader scanner, Pro Trader dashboard. I have it up the entire day, and General Motors is like really strong right now.
Okay.
You could see that right here.
And kind of not surprising, Roger, when you took a look at it. It's not surprising that it's outperforming,
So
the market.
It's killing it right now. I usually look at like, maybe 15 at the most. I don't go too deep, but I look at the top 10, 15. And General Motors, I just glanced at it and I wanted to show you guys that Pro Trader dashboard is agreeing with me today. All right. So
great. So I will say this,
Yep.
just one quick thing. For those
Yep.
of you that are watching this on YouTube, now is a great time for you to go ahead and come into the Zoom room for the second half of this presentation, because we're going to be closing the YouTube room in about 15 seconds.
Perfect. And by the way, just FYI, folks, the SPY, it looks like it wants to either resist at the VWAP. Here, let me just show you. Resist at the VWAP or break through the VWAP right here. We're going for the VWAP. If we break the VWAP, that's level 1 we need to break, and then the second level we need to break is 680. I'm just letting you know for the next few seconds while you're still here and moving from YouTube or whatnot, that we look like we're breaking the VWAP right now.
Yeah, and for those of you that are already here, there's nothing for you to do. You're in the Zoom room. Okay, so that's where we're going to do the rest of this presentation. But if you're in the YouTube channel, I believe Matt has already put a link there where you can go ahead and come into the Zoom room. But if you're already here, once again, there's nothing for you to do. Just sit back, relax, grab yourself a refreshment, and get ready for a terrific presentation. So once again, Roger, I think we're good to go.
All right.